What is up, ladies and gentlemen? Today I'm going to explain to you about what happened to GameStop and what is a short squeeze. So be sure to stick around to the end so that you understand the whole situation more clearly and you understand what is a short squeeze. So you can go out there, brag to your friends about it, and if you successfully brag to your friends about it, do give me a thumbs up and also subscribe down below and turn on the notification bell so that next time you can be the first to pick the stocks that I've picked and make yourself filthy rich. Without further ado, let's start with the explanation of what is a short sale. So what shorting is basically I'm betting that the company is going to fail or that the market is going to fail. And how do I do that is I borrow some shares at the moment, okay? I'm going to borrow some shares from this guy at today's price. So let's just say I'm interested in shorting this company today and this company is now at $10. So I borrow this stock from the brokerage, and what I do is I keep this stock and I buy it at future value and then I sell it back to them at today's rate. I know it sounds really confusing, so let's make it easier. Let's say this pen is worth $5 now. I'm going to go to my friend and say, hey, I want to borrow this pen from you. But I'm making this contract, okay? I'm going to borrow this pen from you and I'm going to make a contract with you maybe for a few weeks or a few days, and I'm going to buy this pen back from you for the future price. So maybe at that time the price dropped to $1. I'm going to buy this pen back from you for $1 and I'll sell it back to you for $5, which is today's rate. So just imagine that this is a stock. That's all there is to it. Let me repeat myself, okay? What a short is I'm borrowing this pen that's currently worth $5 from you, and then in the future I'm going to buy it from you from that price. Maybe it dropped to like $1. I'm going to buy it from you for $1 and then I'm going to sell it to you for today's price, not the future price but today's price, which is $5. So what do I profit? I profit $4 because I'm buying at $1, I'm selling to you for $5. So let's say you ask me, what if the price goes up? What if the pen is now $5 but in 5 days time or in a few days time it becomes $10? Then I'll have to buy it from you for $10 and sell it back to you for $5. That makes the other person get a profit of $5. Sound easy enough to understand? So short selling is just a contract. It's a contract whereby I make this agreement with you that I'm borrowing this asset from you and I will buy it from you for a future price and then sell it back to you for current price. Yes, it's really confusing, so you can watch this video over and over again so that you will fully understand, but this is the gist of it all. So short selling is really disadvantageous, and a lot of people has came to me and asked me, oh, should I short this, should I short that? But no, I'm not a guy who does any short selling. So I'm not going to recommend anyone to short sell because there are a lot of downsides to it unless you're Michael Burry and you can fucking analyze the stocks, like you know where it's going, you can read some data that nobody else can find out, and also you must be fucking lucky. Because first of all, when you're borrowing the assets, you have something called an interest. I'm sure you all know when you borrow things, people are going to charge you an interest. So if I borrow this pen, I'm going to use this pen as an example. So I'm borrowing this pen from my friend, and 1 week later I have to pay an interest of a certain amount. It can be 2.5% ranging up to 20% depending on the demand of the stock, which is the pen. So first of all, with the time frame, you're going to lose money from the interest alone. And that's the difference between buying stocks and shorting. Because buying stocks, going long in the stock, you don't have to pay any interest. But going short, you have to pay interest. Next is margin calls, and this is a deadly one that kills most people. I'm going to use the pen as an example once again. If I borrow this pen from my friend and it's worth $5 at the moment, my initial margin is 50% of its current value, so my initial margin is $2.50. Let's say in a few days time this pen goes up to $7.50 and that has passed my initial margin of 50%. I'll have to compensate for that increase of the value's price, and that is called a margin call. It is to replace the maintenance margin. So let's say you tell your friend, oh, I don't have the money to compensate for this maintenance margin. What else can I give you? So that leads me to the third point. Your friend will say, okay, fine, you don't have to compensate. But what you have to do is, you have to close your position right now. That means you have to give me back this pen. And how are you going to give me back this pen is you're going to buy this pen from me for $7.50 and then sell it back to me for $5. So he's going to earn $2.50 and I'm going to lose $2.50. So that is the third disadvantage, is that if you do not have enough money to compensate for the maintenance margin, you are going to have to close your position at a loss. And last but not least, this is probably the one thing why I hate shorting so much, is because of its skewed position. And what I mean by skewed position is, let's say this pen is $5 and the most I can earn out of this pen from shorting this pen is 100%. Let's say this pen completely has no value at all, it's zero. So basically I earn 100% of my gains. So that means I earn $5 because I borrowed this pen from my friend and now I am buying it back from him for free and I'm selling to him back at $5. So I earn $5. But let's just say the pen goes up to $10 or $20 or $30 or $100 or $1,000. Then what happens to you then? If let's say this pen from $5 goes up to $1,000, you're going to have to buy this pen from your friend for $1,000 and sell it back to him for $5, and you are going to lose $995. Does that sound good to you? So your losses can be infinite. Your losses are infinite. Don't forget the interest you have to pay as well, and if any dividends do come up, you have to pay for the dividends as well. So your losses are infinite but your gains are limited, and that's why I hate shorting. Okay, enough about using this pen example for shorting. Let's talk about the short squeeze of GameStop and why it shot up so fucking high. GameStop was a company that wasn't doing too well in the past, but recently there were a few catalysts that made it spike up a bit, and Reddit, which is a platform that a lot of random people post random things, had this group called Wallstreetbets. So just to give you an example, this group is like the lame group. It's like the group that can never have enough power to move any stocks at all, but they love being a community, they're friendly to each other, they are basically a team, and they want to take down the big guys, those big hedge fund managers or the fund managers. So what happened was they saw an amazing opportunity after the first catalyst of Stephen Cohen and Ken Griffin entering a position in GameStop of $3 billion. A lot of fund managers and hedge fund managers that are super rich, they love bullying these young guys, they love shorting companies and seeing them crash so that they can earn massive amounts of money. But no, this time is different. Wallstreetbets came up with this amazing idea to go long on the company. So what happened recently Elon Musk joined in the fund as well, and that's where all the fun started to begin. But before I explain this, what you have to understand is what is a short squeeze. A short squeeze is when there's a spike in the price of the company stock, which forces a lot of short sellers to close their position. Remember, like I said before, after you borrow the pen from your friend for $5, if the pen goes up by 50%, you have to either compensate or you have to close the position, which is buy the pen back from the friend at the future rate and then sell it back to him at the current price. That's what I mean by this. So now they are forced to close their position because of that spike, and that is what is called a short squeeze. Because the price goes up, either you compensate or you buy it at the position of the future value and then sell it back to them at current value, which makes you lose a ton of money. And not only that, when that happens, when the short squeeze happens, the price will keep going up because you have to buy the stock back at the future value and then sell it back at current value. So there'll be a lot of buying going on. And that's what happened to Tesla, and that's what's happening to GameStop right now because of this smart little guy who noticed there were a lot of short sellers in GameStop. So that is a double-edged sword. It can be used to stab yourself or it can be used to stab other people, and so happened this time is stabbing a lot of other people, especially all those big bullies in Wall Street. So when the price spiked, a lot of short sellers lost a ton of money. And a lot of people that went long on it, all those small guys, they actually made a ton of money from this. And you might ask, why is Elon Musk participating in all this? Isn't he rich enough? That is because Melvin Capital, which was one of the arch rivals of Tesla, they shorted Tesla and they were very vocal about Tesla. They were talking shit about Tesla all the fucking time, which pissed Elon Musk off. And now that Elon Musk is the big boy, he is now the bully, and he sees that Melvin Capital is actually shorting GameStop, that's where he's coming back up and saying, yo, you fucked with me that time, you're screwed now. So he and another billionaire called Chamath came together and started investing a shit ton into GameStop, and that's what makes the price boost up even higher, killing more of the short sellers. So the short sellers are probably crying their bits now. Why is life doing this to me? First COVID-19, now this. And Elon Musk is laughing in his bedroom, laughing at all these guys that tried to bully him when he was younger. And if you ask me, is GameStop going to keep going up? I really don't know, but I will not be participating in this mess. I would like to, just to see what happens to my money. But then again, I really don't want to be participating in such speculative trends. I am a very fundamental investor. I'm a very rational investor. I do not want to be participating in any of these trends. I was tempted, I'll be honest, I was very tempted. I was very tempted to liquidate some shares and trade a bit in GameStop just to see what happens and just to be part of the hype. But no, I rather not, because I really don't know the fundamentals of GameStop, and I'm really not interested in putting this industry into my portfolio, so I won't be investing in GameStop. But this is just my opinion. I'm not a financial advisor or whatsoever. I'm just giving you this for my entertainment and for your entertainment. So if you do like it, do give me a thumbs up. Do share this to your friends who do not understand what's going on with GameStop right now, or don't know what's short squeeze, or don't even understand what's a short. Please do share with them and do educate them in terms of investing, and get them to subscribe to my YouTube channel to learn more about investing as well. And I'll see you guys next time. Peace out.